Do you get your insurance through healthcare.gov on the Marketplace Affordable Care Act plan? Well, if so, does Social Security factor into the calculation of whether you get premium tax credits or have to repay them? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, or smash that thumbs up button. All right, so complicated issue, working with a few of our advisors on this right now, and a very clear rule, but very unclear kind of path to get there. So here's the thing. If you don't have health insurance through your employer, and if you're not on Medicare, then you've got to go find your health insurance through a different source. And whether you like it or not, voted for it or not, up in angst about it or not, there's the Marketplace. The Affordable Care Act plans is healthcare.gov. And that is, it's an imperfect system and has all sorts of flaws, yet this is the system that you can go to and you can find potential insurance coverages that have a variety of features, variety of costs. And yet the cost is tied to what you expect your income will be for that year. And all sorts of confusing things here, but yes, that's right. What you expect your income will be for that year. If you expect your income is going to be low, and I'll define that here in a second, then when you enter that into your demographics, your situation in healthcare.gov, you'll see a reduction in the monthly premium that you pay. Well, how that actually works is you're receiving a tax credit in advance every single month, and that's what's causing you to pay a lower amount. Well, then when you file your taxes, that's where the income that you expected you would earn gets reconciled with what income did you actually earn. And if they're the same, then everything's great. And you paid a lower amount for your health insurance because you got these tax credits, and no need to repay any of those or no need to get a bigger refund or credit because you aimed right. Now, what if your income comes in lower than what you said it would? Well, you're going to get more tax credit on your tax return, and that'll be a refund to you. So it's going to wash out to be the same. But the opposite's true as well. What if your income turns out to be much higher than what you estimated or what you said it would be? Well, then they're going to take some of those credits back. You're going to have to repay them on your tax return, which can be significant, be very, very painful. So the big idea is you need to plan ahead. If you're getting your health insurance through healthcare.gov and I would say in getting premium tax credits, make sure you're doing tax planning. But even if you're not getting premium tax credits, do tax planning. Maybe there's a way that you can adjust things and be eligible for premium tax credits that you're not otherwise getting. Now, these rules have shifted, and with some of the stimulus packages or tax law changes around the COVID era, it's changed a little bit in a good way, that essentially if your income is below 400% above the poverty limit, and I know that's sort of a double negative, that's a tongue twister, it's a loop, but if your income is below 400% above the federal poverty level, then you're eligible for premium tax credits. And how much you're eligible for depends on how high that income is. All right. So what do I mean by income? Or it's not just me. What does the IRS mean by income? When they came up with these rules, when they interpreted the rules that were passed in Congress, what does income mean? And the big question here is, just went through this for some clients, does Social Security count? All right, so income is modified adjusted gross income. So it's adjustable gross income. So all of your income, yes, wages, yes, dividends, yes, IRA withdrawals, yes, pensions, yes, all of that, but minus any pre-tax contributions, or minus any what used to be called adjustments to income or above the line deductions. So HSA funding, yeah, that's actually, it adjusted gross income is after that, so that helps you. IRA funding or 401k, that helps you as well. But it's before your standard deduction or your itemized deduction. Okay, so that's what they mean by income. So then the question is, well, does Social Security count? And specifically, what if not all of your Social Security is showing up as taxable on your tax return? Here's a scenario, and you might look at this and say, if you're on Social Security, you're on Medicare. No, that's not necessarily the case. Here's a scenario. So a couple, 62, they're drawing Social Security. They've got enough saved up for retirement. They're in good shape, and right now, they're drawing Social Security. They've got a little pension, and they're drawing money out of their bank account. Okay, so they're supplementing their income from the bank account, and therefore the only thing landing on the tax return is this little bit of pension income and a little bit of Social Security. Not a lot, just a little bit. Okay, most of it is on the tax return, but it's not flowing over to the taxable side. Well, that makes their adjusted gross income look really small, looks very small. And from a premium tax credit calculation, boy, that would look great. They would pay very little in health insurance costs because they'd get such a big tax credit, because so much of their Social Security is not landing on their tax return. Does the Social Security that you receive but isn't taxable because of how that calculation works, does that impact you? Is that counted for Affordable Care Act purposes, premium tax credit purposes? Bad news. Yes, all of your Social Security income that you received, even if it doesn't show up on the taxable side and is counted in your adjustable gross income, that is counted towards the modified adjustable gross income when determining premium tax credits. Take a look at this. That modified adjusted gross income, again, that's what determines your eligibility for premium tax credits or not. So it starts with adjusted gross income, but then it alters that in some way. And what's that alteration? You add back any Social Security that you received that was not taxable. You also add back foreign income that was deducted. Don't worry about that. That barely impacts people. But the other one that does impact a lot of people is tax-exempt interest. If you knew I've saved up a lot, or I've got an inheritance, or I received a buyout from a business or some property or something like that, and I've got a lot of assets, and I want to make my income look small so that I can get these premium tax credits, I'll invest in municipal bonds or some sort of bonds that have tax-exempt interest. Now they add that back in here as well. So you need to be aware when you right now are looking at, well, what am I going to declare my income, my expected income to be for this next year? You've got to include your full Social Security, and I would encourage you to factor that in from the beginning, because it will all wash out when you do your tax return at the end. And that's sort of the second takeaway with this is, yeah, we're nearing the end of the year. You should be doing some tax planning. I would work with your certified financial planner to see, well, did you already factor all of your Social Security in when you set your income rate or level for your premium tax credits? And if not, what sort of tax surprise might you be expecting, or should you be expecting? And what other tax planning strategies could you implement to reduce your modified adjusted gross income and the amount of premium tax credits you'd need to pay back? Work with your certified financial planner on that. If you don't have a CFP on your team and you're on healthcare.gov, oh my goodness, you need one who's doing tax planning, ideally who's collaborating with your health insurance advisor so that there's consistency and collaboration on giving you the right direction on which plan to use, maybe an HSA plan, and their guidance on the right income level. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there too, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.